Good morning. Thanks for tuning into the trade setup today. I'm Neeraj Shah, and let's get started with the top cues. Remember, the US markets, uh, didn't have as good a day as the European markets did, but still ended marginally in the green. So about a quarter of a percent on average between the Dow, the S&P, and the Nasdaq. So that's essentially how they shaped up. In terms of the other cues, key cues from markets perspective, there was a bit of a uptick in the 10-year yield, and you can see that it's nudged that uh, the mark of 3, so slightly above that percent that key level. So that was probably one reason why the gains in the US markets were a bit capped. CBOE VIX was okay. Brent crude is kind of holding on to that 120 mark. So no great positive cues, no big negatives as well per se. The futures, the US futures as they stand, are trading marginally lower. In terms of a news roundup, well, Boris Johnson has narrowly survived the no confidence vote triggered by lawmakers of his own party. For how long is a debate I can't answer really now, nor that I want to get into. It's just an interesting piece of news. So bringing it, Elon Musk has threatened to end the Twitter deal over lack of info on bots. Now, the US listed Chinese stocks, particularly Didi, soared as the crackdown fears eased out there. But who knows when it changes. So I'm bringing this out because a lot of us are probably investing in global markets directly, and therefore it should be kept in mind. Beijing has inched closer to zero cases as the restrictions are eased. And remember, if this indeed remains this way, then that's probably one big positive from an inflation perspective as well. I'll tell you why towards the end of trade setup. And amongst other news, Goldman Sachs is probably first amongst the larger banks to trim their FY23 earnings growth forecast meaningfully. So keep that in the back of your mind. Inflation plus earnings cuts probably remain the biggest threat, as I think Nilkan Mishra was saying that yesterday as well. SGX Nifty indicating a flattish start, about 0.11, 0.12%, if I'm not wrong, 0.16%. So hardly any changes there. Still in that zone from where it's bounced back in the recent past. Let's see if today is one such day or no. Now, quick check on what happened in trade yesterday. Remember, was an iffy day, and it showed in the way the market breadth was to 183 advances to 314 declines. Now, Oil India had a bunch of upgrades yesterday, as a result of which that stock was up 11%. There's some gains in, Sri Lanka was an exception to the rule, though sugar may be active today, and we'll talk about that. But is an exception to the rule. Not all the sugar stocks did well. On the flip side, I mean, select stocks continued to grind lower, but a bunch of stocks essentially had a slightly iffy day in trade yesterday. Portfolios bled, even if the market breadth was not terribly adverse, was kind of 2:3, right, or thereabouts. So what's the trade setup? I think industries may remain range bound, but I would reckon that they are still in the fear zone. So the chances of the indices really cracking very deeply uh, versus they may be moving higher, I think the probability might be skewed currently, that there might be an uptick as opposed to a downtick. Though this week is so macro driven, particularly the RBI MPC meet slated to happen tomorrow, or the outcome tomorrow, that maybe will continue to be range bound until that is out of the way for the Indian markets. And from a global markets perspective, both the ECB as well as the US CPI print. So therefore, considering the macro events, we may actually have a range bound trade. Metals probably remain active. They were active yesterday. They might remain active due to the Chinese reopening as well as the falling input cost factors. So you never know. The stocks have corrected quite a bit, rightfully so maybe. But because if indeed we do see China continuing on this path of opening up, then metals may continue to remain active. So keep that at the back of your mind. And a lot of queries almost every single day about what's happening to cement stocks, why the corrective moves, etc. I mean, we know the reasons per se, but amongst other things, I think I was reading a survey. Two brokerage notes today spoke about how cement prices across the country have not been able to stabilize and have not gone up. If anything, the prices have gone down a bit, and maybe that is one more factor that is adding to the kind of falls that we're seeing in the cement stock. So difficult to make that call. Just thought I'll bring that simply because it's difficult. I mean, so many people are talking about why cement is doing what it's doing. So therefore pertinent to bring it out. Now, what are the stocks to watch therefore in such a scenario? Again, much like yesterday, not a very news heavy day, but try to summarize a few that stood out for me. Keep in mind, just one thing before we get to individual stocks, there is a lot of WhatsApp chatter around the 76,000 domestic procurement for defense goods. And of course, it's a positive. But I think if you read through what's happened carefully, this is not an set of orders which will be placed immediately in the next 6 months. This is a long drawn affair. Is it positive? Yes. Is it immediately positive? Not necessarily so. So be careful if you're trying to trade into defense stocks today, thinking that, oh, because it's 76,000, it's great news for everybody. Yes, it is, but it's over a period of time and not in the very short term. Stocks to watch. I don't know if PB Fintech has a reaction, but the chairman and CEO, Yashish Dahiya, will sell about 37 lakh shares via bulk deals, but no further sale of shares planned beyond these shares, at least for 1 year. Let's wait and watch what happens to BB Fintech today. Difficult to call. I mean, I would reckon that it could have a soft start, but let's see. Sugar could be interesting. Yesterday, Renuka was the exception to the rule. Like I said, some of the others haven't done well, but today, Balrampurs, Dhampurs, Avads of the world could be active because white sugar futures are at the highest since 2016 in London. I think they were up some 3-4%. So that could be interesting to monitor today. Paytm could be interesting for two reasons. One, Apple has made a debut on the buy now, pay later service. Now, again, this could be a slightly longer drawn impact, if at all, and wonder how it shapes up in India, so on and so forth. But, it had an impact immediately on the US peer Affirm, which was offering a similar service, which slumped about 5.5% on Monday. And the belief is that maybe some of the Asian region stocks or emerging market stocks, which would open for trade today, could have some fallout as a result of this. Because, I mean, when Apple puts its mind to it, traditionally it's shown that it actually is successful in some of the things. Let's see if this has an impact on Paytm today or no. Incidentally, JP Morgan has come out with a constructive view on Paytm. They're reinstating the overweight. The target price has been cut to 1,000 from 1,200. But the reasoning is interesting, viewers. Let's first read the reasoning, then I'll tell you what I make of it. But they're saying that the sustained improvement in profit margin contribution over the last 2 quarters sets the stage for operating leverage. Indirect costs are moderating, which is resulting in consistent downtrend in adjusted EBITDA loss and an eventual path to break even. The reduction in the adjusted EBITDA loss with better cost controls in indirect expenses will be a key fundamental stock driver. Now, it's all focused around how costs are reducing, which may lead it to break even at some point of time in the future, which is uncertain. Difficult to give a call, difficult to be convinced about some of the arguments made, simply because in its bread and butter business, which is technically not a very large money-making proposition, it is already ceded ground to PhonePe and Google Pay. So can it really get in a lot of people back, and can it meaningfully create wealth? I don't know. I hear a lot of people skeptical about this, and therefore I just thought I'll bring it to you. Add to that, I don't know if Apple's buy now, pay later service has an impact or no, or will have an impact in the near future or no. But do watch out. If Paytm were to correct today, you would know why, and which is why this whole Apple's debut thought was important. This is purely a trading thing, but it could be important. Circuit filter changes for some stocks. So from 5% to 10% revision happened for Adani starting effective today for Adani Transmission, Easy Trip Planners, Saregama, Chennai Petro, Supreme Petro, and from 10% to 20% on IOL, IRB, Sharda Cropchem, SML Isuzu, and TV18 Broadcast. Some brokerage calls, which is on, these are circuit filters. Now some analyst reactions. MRF has been cut to a sell at Investec. The price target has been cut to 64,930. Voltas has been raised to a hold at Canara Bank. Price target at 1,007. Let's wait and watch. Voltas, remember what happened yesterday was the market share data came out, which was slightly more positive than what was believed to be earlier. And therefore, maybe Voltas had a decent outing yesterday and could do well, or at least has been raised to a hold at Canara Bank. The other interesting piece, like I said, was cement. And look at what Jeffries is saying. I was telling us here, watching some analyst conversations on or brokerage notes on cement. So here's the Jefferies note. They say that all India average price declined 3% month on month for May 22, as prices in multiple areas uh, multiple markets decline, driven by weak demand as well as pricing discipline. The smallest decline was seen in the western region and the largest in the central region. Uh, Price hikes were announced in very few markets. They believe there's a downward risk on earnings estimates, which has resurfaced as price hikes are not sustaining and costs remain elevated. Cement has been on a bit of a downtick. Maybe it is already in the price, but do watch out for this set of comments from Jefferies as well. There's some queries on Bank Nifty, on LIC. Well, it'll be interesting to see what Morgan Stanley's conference draws out on banks. Remember, they were the first ones off the block to say that back up the truck and load financials, because if rates are moving up, then that's positive for banks. So therefore, maybe a bit of a consolidation. I was reading a couple of technical chartists who were saying that if the markets were to be heading higher, then banks will have to take the lion's share of it. So that's Bank Nifty. On LIC, it's just so difficult to call this one. It's lost quite a bit of market cap. There are plenty of more efficient players out there who are giving a run for the money, but insurance itself, don't quite know. For the longest time, it's making the promise of creating wealth. Somehow the stocks are not showing that. The question to every LIC shareholder would be, you got to figure out whether you want to be in insurance in the first place. And if you want to be in insurance, do you want to be in LIC necessarily, or could a swap to some of the private players be a better bet? I think read some reports out there that might help you make this decision. Lastly, what stood out for me before we wrap up, and this is a Bloomberg story which said that 3 of the key supply side factors which are driving today's global inflation levels have turned around. Uh, Prices of semiconductors, shipping containers, and fertilizers are all down, which is all good news for consumers in the long run when it comes to things like electronic goods and food. Boy, does the world need this? Yes, it does. If this continues, that could be a really good thing for a sentiment perspective. So do watch out for this. This is a Bloomberg story and a Bloomberg observation, but just thought we'll bring it. It's probably one piece of good news on an otherwise dull day, a seemingly dull day for the equity markets. Thanks so much for tuning in. If you're stepping out, please stay masked up if you can. Cases are on the rise. It might just help all of us to be a bit more careful in the near term.